Hey, hello guys. Good afternoon and happy Sunday. And welcome to another section of Forex Network weekly review or weekly analysis. How we'll be doing today is trying to analyze the market based on past market action. We are trying to forecast what we expect to happen in the market for the next trading section. So that is what this episode or this video is about. I said last week, before we go to the market, it's better we also try to remind ourselves the recent fundamentals. I said last week, we said the US market is currently trying to gain momentum, probably after the last, because if you check at the late last year and early this year, we notice the US market was currently on the bear side. The bears are always winning. The USD card was going bearish. Anything, it seems as if like the US market was going bearish. But from what you can now see from the market, since the US market is back and trying to regain its momentum by trying to push its market back bullish, probably maybe after the what's it called, the election, after the coronavirus, and after the whole thing that's happened that took place last year and early this year. So since the market is now trying to regain its momentum and try to gain back or go back to its previous position. Okay, so that's it. The first thing we'll be looking at this moment is the GBP USD. So looking at the GBP USD, as last week we said, let's just open the charts and see what we're expecting. Okay, we've already analyzed this, as you can see. So as last week we said what we expect a downward move on this market. As you can see, a downward move actually occurred because this market has been on a downside for, I think, for some time, as you can see right here. So now what we're expecting now is now from here. So putting our fundamentals at the back of your mind, what I'm expecting of this market, being since it's already in our zone. As you can see, this is a zone that has been tested previously. It was tested right here. If you look again, it was tested at this point. If you look again, it was tested, I think, let me check. Okay, fine. It was tested right somewhere here again. So somewhere here. So this is a valid structure. So being back in that structure, that's like breaking below it and coming back for a retest. What you're not expecting is what brings us to another aspect of our trading, another aspect of our analysis chart. And for those who still don't know how we analyze our chart or the strategy we should be using, we are using combination of price action, demand and supply levels, the market structure, and also the candlestick formation. So that's how we are trying to analyze the market. That's how we get our market trading opportunities. Okay, now coming back to our previous structure, since we expect to be bearish. What we now expect of this market now, what takes us to our candlestick formations. So what you want to see in this market now is for this market giving us probably maybe a bearish engulfing candle, giving us a rejection to the downside. That you can see something like this previous candle you can see right here. If you can see something like that again, that would be good for us. If you can also see probably the inverted armor, if you can see any of the candles telling us okay, the bears are now ready to take over this market, then you'll be going on this market on a short side. I repeat, you'll be going, okay, let me say sell, because a lot of people say they don't understand the difference between short and sell, then buy, long and buy. Okay, I'll be using the sell for now, or maybe I might still use long or short. Just that I know that when I say long means you're buying the market, and when I say short means you should be selling that market. So that means you'll be going on the short side, sorry, on the sell side of this market with our stop loss right here. And for those that say they would like me to always call the number for them so they can know the number exactly I'm referring to. Our stop loss can be anywhere above 1.39. Okay, sorry, I heard the market for long. So our stop loss will be 1.39074. Anywhere above it, you can put your stop loss. Remember, this is a zone, so our stop loss can be somewhere around there. So you can just move your stop loss maybe somewhere here, somewhere here, somewhere here, anywhere around above this market you can see here. That's our stop loss will be. Then for take profit, I suggest you leave your take profit open. Why is what they call the trailing stop? And still for those that say don't know what is trailing stop, because I do get your feedback, I get your comments, your emails, I'll be getting everything. The fact that we don't reply doesn't mean maybe we are not getting them. If we see the one we should reply on, we surely send replies to them. So for those that said they don't know how to trailing stop is simply mean when the market has moved in your favor for a long time, you simply move your stop loss from where it was to saving some profit. You move it to the nearest low. Let's say, okay, let me look for another. Let me for a chart somewhere here. Okay, let's say you take this market somewhere here now. Somewhere here, you buy this market, the market moves to this level. Remember, your stop loss should be somewhere here. The market moves, let me zoom it. Then the market moves to this level right here, to this level, then start going up. You can move your stop loss from where it was to somewhere right here again to saving some profits. And if the market continue moving, let's say it moves again down here, have a what's called the exhaustion phase. They start pushing up again, as you can see right here. It start pushing up. You can also still move your stop loss from where it was previously down here. So that's where you're trailing the market. So please try to understand this because I might not explain in the next what's it called, the next page we'll be looking at. So I'm trying to use the GPU Usd to give you what exactly I'm talking about, because next I'll just be calling them. I might not have time to still explain it. Okay, I hope that is understood. So I repeat, on GBP USD, we are expecting a short market. Once the market opens and it gives us sign of what? Of the BS. For now, we can't see any sign. Though we are seeing the low momentum candles already. You can see the low momentum candles right here. Let me use this. All these are what I refer to as low momentum candle. You can see connect the pin bar. You can see some rejection there. So that means, luckily enough, if the market opens and we see the BS coming into the market, then that means we'll be taking this market on the short side. Remember, you should see, don't just enter the market until you see what the signs or the signal. And please, if you're new to this channel, you haven't subscribed, please just look down below on the red icon. You will see subscribe button. Please click on it, and don't forget to click the notification bell beside it. That way you get notified every time we post every other video. And please do it to share this video with your friends, your family, and your loved ones, mainly those that are also in the trading industry with you. And please remember, give the video a thumbs up. Okay, let's go to the next one. As I said, we won't be wasting much of the time right now. We've used the first one to analyze and tell you what we're expecting. So the GBP USD, the same thing. Remember the fundamental. The US market is what? Is bullish. So what we're expecting now of this market is what? It's already been bullish, as you can see right here. So now, it broke this previous structure right here. It broke right above. It came to this level here. Went down, they got what is called at the bullish momentum, broke right above. So what they're expecting is this market was to have a retest. Remember, it mustn't get to this level. So what we're expecting is to give us the bearish engulfing, give us the reversal candlestick patterns. Once you can see that, probably maybe the market opens, they have something like the market trying to move down again, then getting rejected right from maybe when this week they're getting rejected, closing right here, then we get the bearish candles. Then that means we will be entering this market with our stop loss below this structure here. So let's use this to mark the stop loss. So our stop loss will be right here. That is 0.92538. That's our stop loss will be. And as I always say, since this is a trending market, your take profit should be open. Always try to what? To trail your stop. Just trail it. That means move your stop from one place to another. So that is for USD CHF. I hope that's understood. I repeat, what we're expecting of USD CHF is what? Is to long the market with our stop loss below this previous structure right here, and our take profits open. And remember, you're not just taking it, you wait for the market to what? To give you the signs right here. If you can't see any of the signs for now, you can't see the low momentum candles, though they are there, but these are not what they want because they are still of the same size. You expect something like a smaller candle, then something like this. This is what we're expecting. Let me see if I can. Okay, this something like this. That candle there is a low momentum candle. Something like this is a low momentum candle. Something like this is a low momentum candle. So that's what we are expecting. Expecting to see something like a small candle, then probably be followed by a good bearish candle. Then we expect the market to be bearish with our stop loss right. Okay, let me use it. A stop loss right here. So that is for USD CHF. So let's move to the next one, USD Gpy. That's somehow similar. They move somehow similar. But let's still check it out so we can also know what also we are expecting of the USD Japanese yen market. As I said, please always put at the back of your mind the fundamentals. The US market is what is now probably, maybe we are not saying it's certain, but we are expecting what to be bullish, because what you can see that it seems it has been bullish. If you check right from here, somewhere here, you can see that the market was bearish previously, but currently it seems as if it's gaining what? It's gaining momentum. So that is why we are now what? Bullish on this market. Okay, you can see same thing here. This market, let me just highlight this previous level right here. Okay, sorry, I'm trying to, okay, that's what, okay, good. So this market actually go to this level, got rejection. So what we're expecting is what's already giving us what? That's giving us the low momentum candles. We can already see we can see the bullish candles entering to the market. So I will say this market currently, buying this market was the open market. We can buy this market, but remember the market might open with a gap. The market might open now and you see something like, sorry please, the market might open and you see the market probably maybe somewhere like this or somewhere like this. It's possible. So if the market should maybe above it, we what for a test of the another previous structure. But if the market opens and the market continues in this direction, maybe after this, the next candle just see me like I see it's still bullish, then you can enter this market on the long side, which is the buy side, with our stop loss right here. So this year stop loss will be 108.024. That is our stop loss. And our take profit, as I said, it's a trading market. So what expected was to leave the take profits open while you currently trade the stop. So once you're in a good profit, move your stop. Remember, not when you're maybe just few pips, you move your stop loss. The market has to have a little exhaustion phase before pushing forward again. So when you're in, let me say, good profit, probably be moving to, sorry please. Probably maybe when the market moves somewhere right here, they cannot move your stop loss from here to your break even. That's where you enter the market, just to lock up some small amount of profit, just in case the market reverse. The market is already here, then the market breaks above it, then have a test of the previous structure, which is right here again. They cannot move your stop loss below that structure. So that is for USD Gpy. So let's go to the next one, which is the Aed Usd. I'm sure you already know what we are expecting of this market right now, following the previous analysis which we did. So let's just mark the structure, still very necessary. So this is the previous one. Breaking, what happened like the market broke up below this, it tested it, came back again, it traded a second time. So we're not expecting that for the market to give us, let me say, the candle we should always expect for a reversal to the downside, which are our inverted hammer. We expect the bullish engulfing, the bearish engulfing, sorry. We're expecting the pin bar. We're expecting just maybe the market moving, then being injected back again to the zone. Then if once you can see the good bearish movement of this candle, or the good bearish candle fully formed, they enter this market on a sell with our stop loss. Let me still use this for the stop loss. With our stop loss above this previous structure here. If the market moves, let me say below, just from here down, they can put your stop loss somewhere here. That is 0.77175. The market move, let me say, a little above it again before showing the reversal candlestick, showing the low momentum candlestick. They can put your stop loss 0.777396. So that's our stop loss. So for our take profits, let's check. You can see it's still a trending market. The market just started trending, so we can still leave the take profits open. As I said, through the stop, just through your market. So that is for the Aed Usd. Let's go to the next one, which is the Euro Jpy. We are almost done. As I said, it's 7 pairs we'll be looking at for today. And please, if you haven't subscribed, it's still very necessary and very important also. Do it to subscribe by clicking the subscribe in the red icon below, and don't forget to give this video a thumbs up. Okay, let's go to the next one. This is a long market. Okay. So this already was like giving us what the candle. This is already giving us the bears are already in this market. So we're expecting is when the market opens. Sorry, please. If the market when the market opens and the market continues, maybe did not open with a gap. Remember, the market might open with a gap. From where it might open somewhere here, it can come back again to test this level. So if it comes back to a test, let me see. If it comes back to test this level, they can start seeing a candle something like this being formed right here again. Then you can now go on this market on the long side. So if you're going long on this market, our first take profit will be right here. this previous high, and our stop loss will be below the previous low, which is somewhere right here, 128.626. So that stop loss will be, and our take profit will be, our first take profit will be somewhere here. When I mean first take profit, once the market start getting there, you can move your stop loss from where it was to cover up some loss. Open the market will break above it. So our next take profit will be somewhere here. You use the previous next high, as you can see right here. That's the next high. That's 129.901. If that still get broken, they can now move your stop loss down, and allow the market to continue moving in your favor. Okay, as said again, a repetition. Euro JPY, we're expecting a what? A long market. Still on what? On Euro JPY. Okay, let's go to the next one, which is still the US market, and that is the New Zealand USD. So for New Zealand USD, what are we expecting? I'm sure most of you already know from the fundamentals which we said earlier. This is another structure, somewhat similar to that of I think GBP USD, USD CHF, and USD Gpy. They're all the US market. So somewhat similar. We can already see the low momentum candles already forming. We can see rejection, more like an inverted hammer right here. So if this market opens and we get the bears coming in, maybe opens and forms a good bearish candle, they'll be going short on this market. I repeat, when the market opens and we get the bears in this market, they'll be going short on this market with our stop loss first. Our stop loss will be somewhere right here. That if it opens where it is, like they open with a gap. But in case where maybe it's open, then maybe with a gap is somewhere here. Then wait for what? For the same thing. Wait for the bears coming into the market. Wait for the sign that the bears are in this market. Then once you can see the bearish candle, the strong bearish momentum, they can go into the market with your what? With the stop loss above that previous structure. So, but if you continue this level, maybe the market opens, then you see the bears coming in, they can put your stop loss right here. Let's say somewhere here, if you have good risk appetite, you can put it. This is the best place. But if you don't have good risk appetite, that if you're putting it somewhere, that means the market open with a gap. But if the market continues, then it's still okay to put your stop loss somewhere here. That's 0.71964. With a take profit, first take profit should be right here. It should still be on the low. That's 0.71008. That's our first take profit. So that means when your market is getting close there, you can what? You move that take profit, shift your stop loss to what? To somewhere good to cover up some profits already. So let's go to the last one, which is the CAD JPY. And for those asking also the broker I'm using, the broker I'm using is Rally. They have the Naira account, they have the dollar account, and I think they also offer online and offline classes. So you can do where to open an account with them. I will leave the link below so you can open your own account if you need any assistance. Once you open an account manager will be assigned to you, and that is where you can always get an up. You can always call her at any moment of the day for your words, for any assistance needed. Okay, let's go to the last one, which is the CAD JPY. As you can see, this market is a what? Is a long market. So what is it doing somewhere here? Let's see. Let's move this somewhere here first. Remember, that's not a thing. I'm not saying that's the thin line that it must follow. I'm only okay. Then let's say somewhere here. So this is like what? This is like a pennant, or let me say a flag. So what I expect now is for this market to what? To break. Oh, sorry, please. Okay, right here. Quite basically, what market to break above this level, it tests it, giving us the candle which we always see as our reversal candle, our bullish candles, our low momentum candles, giving us our rejection signs. And once you can see all that, then followed by a good bullish candle formed, then we go this market in the long side. That means we'll be buying this market with our stop loss below this level right here. That is 85.388. That's our stop loss will be, and our take profit, as you can see, the trending market. So you can leave your take profit to what? Open while you use your trailing stop. So I think that's the last one for today. Let me just recap. The GBP Usd, we are shorting it. USD CHF, we are long on that market. USD Gpy, long. The Aed Usd, we are long. The Euro JPY, we are long. The New Zealand USD, we are long. we are short. I'm sorry, please. On Aed USD we are short. New Zealand USD we are short, and on CAD Gpy we are long. Okay, I hope that's useful. Please do well to have a good and a successful trading week. And please, if you need any other information for those asking for the broker we are using,